the scenario I see as being the most likely in 2025 is for gold to remain caught within a relatively narrow channel with a central price around 2,600 between 2,600 and 2,700 US dollars per ounce.
Hello, you're watching Proactive. I'm joined by Ricardo Evangelista, analyst at Active Trades. Ricardo, Happy New Year. Very good to speak with you. We're chatting about gold today. It hits a number of consecutive records in 2024. What were the main drivers of that?
Hi, Steve, and thank you, and Happy New Year to you too. Yeah, so 2024 was a really good year for gold. So it was the best year in a decade for gold prices. I think there was a perfect storm of supportive factors behind this dynamic, which include, of course, the switch to a more dovish stance from most central banks, especially the Fed. So we've seen that the main central banks, or the majority of the main central banks, started cutting interest rates in 2024. Obviously, that reduced the cost of holding gold, which is a non-yielding asset, and made it more attractive to investors. So that was a big factor. Another one that also weighed considerably in this dynamic was the abundance of geopolitical turbulence all around the world. So we've seen the continuation of the troubles in Eastern Europe, the war between Russia and Ukraine, of course, which continues to generate quite a lot of anxiety, especially in Europe. We've also had a deterioration in the Middle East, with the rising possibility of an all-out war between Iran and Israel, which threatened some of the main shipping routes in the world, the supply of oil from the Gulf, which is the main exporting hub for oil, as we know, and all of that created anxiety amongst investors. We've also had quite a lot of purchases from central banks, from China, from India, and also from other emerging economies. This could be linked to a certain drive to de-dollarize or to somehow decouple some economies, especially in emerging markets, from the dollar. So that also drove demand for gold, and also economic uncertainty. So there's been some economic uncertainty, which once again, mainly driven by suboptimal growth levels in China, also increased the anxiety of investors and enhanced gold safe haven appeal. So I would say that altogether these were the main factors that were behind gold's very good 2024.
How about its performance so far this year? It fell back to around $2,600 an ounce just before New Year's, but it's since improved. How do you see it?
Yeah, so I mean, we're only 6 days into the new year, but it feels as though already a lot has happened. So we know that the U.S. election has had an impact on this. The incoming administration promised a protectionist stance in terms of global trade. This is seen as likely to create some unwelcome trade friction that is likely to drive higher consumer prices in the US, so force the Federal Reserve to keep interest rates higher for longer, which is a scenario that is very, very, very bad for gold, which, as I said earlier, is a non-yielding asset. So this scenario has played into the minds of gold trades, and so took some steam of the gold rally that we'd seen for most of 2024. And what we're seeing so far in this year is a play between this sentiment of some apprehension in regards to a shift in monetary policies from the Fed, from what was perceived as being a dovish stance with potentially 4 interest rate cuts in 2025 to a more hawkish approach, with the markets now pricing in only 0.25% cuts in 2025. So this is on one side, and this plays against gold prices. On the other side, we have the ongoing geopolitical turbulence that continues to drive the appeal of gold as a safe haven asset. So what we've seen so far this year has been a play between these two factors. And today, for example, we can see that following some reports that emerged in the media that Donald Trump's administration will actually water down some of these tariffs that they have planned and only apply them on very specific imports, has been good. So we've seen that the US dollar dropped as a result of that. We've seen that treasury yields also softened, and this was positive for gold. So what we're seeing this year so far is a play between these two dynamics.
I mean, having outlined all the dynamics affecting gold price, how would you expect it to perform in 2025? Will we have more record highs for the metal?
Well, it depends. It depends, but the base case scenario that I see is, so the scenario I see as being the most likely in 2025 is for gold to remain caught within a relatively narrow channel with a central price around 2,600, between 2,600 and 2,700 US dollars per ounce, and this reflects the tug of war between these two conflicting forces. On one side, gold's appeal as a safe haven asset, which is positive, and on the other side, the shift in monetary policy from the Fed, which really weighs on gold. So I don't anticipate the return to the very bullish sentiments that we saw in the market for most of 2024 for gold. I don't see it hitting a new record high at least in the medium term. I mean, who knows what's going to happen? Who knows what the second half of 2025 will be like? But for the moment, I'll stick to this view that gold prices will remain within a relatively narrow channel.
Well, still, even at these levels, I'm sure many gold miners are smiling. Ricardo, thank you very much for your insights.
Of course, it was my pleasure. Thank you, Stephen.
That's Ricardo Evangelista, analyst at Active Trades.